Welcome to Finance Files, a podcast hosted by Whitney Coford and Brittany Carter with occasional appearances from my dad, Greg Coford, and other guests.
We talk about all things finance, including investing, trading, economics, capital markets, and business management. Learn the investor mindset with us. Disclaimer, this podcast is not investment advice. This is purely for entertainment purposes.
All right, so let's open today's finance file, which is how the fundamentals of how to do due diligence. And to that end, Brittany is going to cover a large cap company, and I am going to cover a micro cap company in the same industry. So should we do another drum roll? The industry is dun da da da.
Warehouses and supermarket centers.
Sexy.
So sexy. Well, I don't know. I love Costco. And that's the one I chose, which I actually covered as an analyst too. So it was kind of like coming home.
Oh, that's cool. I didn't know that.
Yes.
Yeah, the company that I chose, since Brittany chose Costco, I had to find a micro cap in the grocery space. So the one I found it's called Maison Solutions, and I probably butchered the name. So sorry, Maison. Maison. Anyway, why don't you
it's an Asian supermarket, but the
Yeah.
word maison is French, which it means house in French. So I'm a
Although
little
then I'm like, maybe it's supposed to be Maison. Anyway, irrelevant.
Yeah. I don't know.
I should have looked it up before. Oh
Due
well.
diligence. We'll add like a little, like for people on YouTube, we'll add a little what it is underneath.
Exactly.
Perfect.
Okay. Do you want to start with Costco?
Sure. One sec. Let me pop open my screen. All right. Can you all see my screen okay?
Yes. And
Okay.
for those listening, this may be another episode that is better watched since we are screen sharing, but we'll do our best to describe what we're looking at.
For sure. So I think this was actually an example where ChatGPT I don't think was as I was like, give me a general overview, and it was kind of helpful, but I was like, yeah, I absolutely need to do my due diligence here. What's really nice about the warehouse club and super centers industry in general is that it is low volatility. So we kind of talked about that vitamin versus pill. This is almost beyond the pill in that, I mean, you need food to live, and so these people they're selling essential items. So the other thing that's very interesting about this industry is generally warehouses and large super centers are going to be they are going to be lower cost. That's a premise. So these tend to do well during economic turbulence. So I think that's something for people to remember. Just because the economy isn't doing well doesn't mean a specific vertical isn't. So there's certain verticals that actually tend to be better, that tend to perform better during economic downturns. So I gave the example randomly of like the cereal production industry, because people switch to cereal because it's cheaper when times are tight. So you want to definitely take a look at, does my industry run in line with the economy? Is it going against the grain? In this case, I mean, they're still growing even with the economy doing well. So, but I would generally just say the volatility is incredibly low. The other thing is it's a super center. It's a warehouse. Barriers to entry are high. That is going to be a very high fixed cost. Very few people have the capital to grow that. Not to mention, one thing that I did hear a bit more was talk about the competitive advantages. I did talk a bit about like barriers to entry with Spirit, but I think there weren't that many competitive advantages. Whereas you look at Costco, I mean, they are one of the largest retailers in the world. They have such strong buyer power. I've been on the backside, fun fact, of like some of those negotiations where they're working with the brands, and sometimes you really aren't even making that much money. It's more an exposure play because you're just getting in front of so many people. And then the volume is so high that maybe your spread is significantly lower, but you're just have such high volume, you can actually make a decent enough spread to make it worth your time, right? The other thing that's really interesting is Costco only partners with one payment processor. So I'm sure you've all been to the small bodega where like, we don't take American Express. Funnily enough, Costco always required you have American Express for the longest time.
Oh, I
And
didn't know that.
yes, yeah, so you could only use American Express. And someone at American Express got fired when this happened, but basically Visa came in. I can't remember the year, but Visa came in and was able to like sneak and like switch to where they switched from American Express to Visa. But the funny thing that people don't realize, they're like, oh my gosh, Visa won the business. They're so smart. But if you look at the terms that Costco was able to negotiate, I don't like Visa. I don't know who came. Like the real winner here was Costco. Okay, like they basically do not pay payment processing fees, which you're like, oh, that's only like a couple percent. But when you're dealing with billion, like it's crazy how much they must be saving through their strong purchasing power, both on like just on the supplier side and also on the payment processor side, right?
And I
They
imagine
also,
for Visa, so what's the upside for Visa in that deal?
well, think about it. How many credit cards do you own with?
I don't want to admit that information, but it's probably like 5 or 6.
Okay. Well, let's also step
I
back.
don't know if that's a lot or not,
I
but
actually, well, actually, let's okay. Wait one sec. We're just gonna Google this. How many credit cards does average American have? 3.84.
oh yeah, so I'm
So
up
think,
there.
okay, and so think about how many. I think most people have like a Visa by default through whatever bank they have, right?
Oh yeah, I definitely have at least one of each.
Okay, right? So a lot of people will have like a Visa payment processor, but how many people have American Express? That was like a
Right.
very one-off thing. So it made so much sense for American Express, like having Costco, because if people wanted to shop at Costco, they had to have an American Express card. And
Hmm.
Visa, now it's like, hey, no, you have to have a Visa card. And think how many
Right.
people didn't instigate getting an American Express card, even if they did have a Visa card, because they're like, well, I don't need an American Express to use Costco. So it was
Right.
very smart, like, because you're also just making other purchases on that card. So even if they're losing out on Costco, like I heard they were basically losing money, like taking Costco on with like how well they negotiated their payment processor fees. But it was very much a long term, more like macro play that goes into how that facilitates purchasing from other businesses as well as whether or not you're going to get an American Express card.
Okay.
Yep. Uh, but yeah, so those were things I like. I mean, when you look at these data points, it's really, I mean, it's very clearly a solid, safe business to invest in that regard. So, like, when I look at the macro stuff, it all checks out for me. Also, fun fact, Costco is technically the largest pizza chain in the world.
Ooh, investing in grocery and pizza.
Yes, because they have their little pizza center. So, in case you were wondering and you need to whip out a fun fact at a dinner party, I am obsessed with pizza, not the Costco pizza. Well, actually, Costco cauliflower pizza. Um, Milton's frozen vegetable, very good. Back to the numbers. Let's hear. So, Costco wholesale. So I did something similar to what I did with Spirit, where I just pulled these key numbers to see how the performance has been. They have done like really well. They've continued to grow strongly. They've actually lowered, yeah, so I took some notes here. So they've been able to reduce their debt to capital ratio. So that means that they have lowered their costs and still maintained high capital. And then their price to equity, I thought was very high. That was what I was a little worried about. So the price to equity ratio is looking at the price of the stock relative to the equity. And I did think it was like if you look at the PE ratios elsewhere, I mean, I think it's like almost double Target and stuff, right? 40. So that was a little concerning to me, and that might mean it's overvalued. So I think this is something that you want to look at when you're looking at a business is it can be a good business and it can be growing, but it might be overvalued. So if the price to earnings ratio is really high relative to others within the space, and I would say too, like you want to look at the industry as a whole, right? Because different industries are going to have different average price to earnings ratios. And so that to me was quite a big flag, actually, and that it might be a solid business and it might be growing, but it might be overvalued relative to how it's performing. I also thought it was kind of interesting. We mentioned dividends really lightly in some other weeks. Costco does pay a dividend. So they pay a dividend of $4.64 per share. It's like 0.52% yield. I mean, it's not crazy high like some other businesses, but you're very much more so betting on the future value of this company. I thought it was a nice small perk. And when a company is giving out dividends, that typically means that it's doing well, because if it wasn't doing well, it would want to use the money that it would historically have put in dividends towards investment in other purchases to help improve profitability and improve the business. So yeah, I just looked at it relative to others. It's been growing well. And I think my only thing is just that the price to earnings ratio was really high relative to others. So I would really, if I, had done more due diligence past this, I would really want to double down on better understanding their growth strategy. I do know for a fact they've been expanding, like of all markets I thought they would fail in, France. They are so beloved and like crushing it, despite the fact that my ex loathes Costco, and every European I bring to Costco hates it. It's blowing up in Europe. So I think there is a great growth opportunity. I would just kind of want to better understand, okay, what's the global market look like for this industry? Do I think that it can justify the price to earnings ratio?
So is this a yes or a no? Or, well, it sounds like requires more due diligence.
Requires more due diligence. Do I think it's a secure investment in terms of like its low volatility and everything? Yes. But there is a potential that it is overvalued. And that's where it's a little bit of speculation in terms, like you just never know for sure, right? But like I said, I want to look at it relative to others in the industry. And if you look at it relative to others in the industry, it is incredibly high. So I'm going to really want to double down and understand their growth strategy to see if it justifies that higher price to earnings ratio. Yeah, and I think the reason why we wanted to choose microcap is it's fun to just look at how different, like they're in the same business, but.
For sure. Yeah, so started on the website. I actually quite like their company overview. One of my kind of check boxes that I like to look for is what's the elevator pitch and is it impactful? And theirs is basically the company is committed to providing Asian fresh produce, meat, seafood, and other daily necessities in a manner that caters to the traditional Asian American family values and cultural norms, while also accounting for the new and faster-paced lifestyle of younger generations and the diverse makeup of the communities in which the company operates. So like that, I felt like was actually a really good elevator pitch, but then it's like, okay, what are they doing? Are they actually doing those things, right? That's the question. Minus points because they did have an investor presentation. Which window is it? But it's an old one, so that's not great, but we're gonna go through it anyway. So the investor presentation, this one's from May. So normally I would reach out to investor relations and request an updated deck, because obviously a lot can change in the course of a few months, but I did this today, so we're just gonna go with what we have. So to start off, just some of the things that flagged for me initially, they have 7 operating stores across 2 states, but the branding is different in the 2 states. So that's something that I would ask about. And usually when I'm looking at these microcap companies, I'm literally I keep a Word doc and I just write down all of my questions as I go. And a lot of times a bunch of the questions end up getting answered as I read through all the different documents, like the news releases, the deck, the financials, and then whatever questions I have left at the end, that's when I then set up a call with investor relations, or a lot of times with these micro caps, you can actually just talk directly to the CEO, which I love, because then you actually get to ask firsthand questions about their strategy and kind of get a better insight into how they think about the company and its growth potential. Anyway, so this company has 7 operating stores. They projected for 2025 revenues $120 million. That's a number I'm going to want to dig into. They're also projecting net income positive. So again, a number I'm going to want to check into and figure out what exactly are they doing in order to reach that goal. They talk about being a vertically integrated supply structure, but they only have a 10% ownership stake in this Daichang trading company with plans to acquire the remaining 90%. So that's kind of like, okay, wait, why don't you have 100%? What's the plan? So again, always asking why and how are they going to get to the goal that they're working towards. Another thing that came up is they talk about stringent quality control procedures across the supply chain to ensure the freshest products. What are those control procedures? So a lot of times something will sound good on paper or on the investor relations page or whatever, but you really want to know what exactly it is. And the best example I have of this was I was talking to a mining company one time, and all over their website, their deck, like everything, they just really emphasized how like the importance of ESG. But I couldn't find anything that specified what sort of initiatives they were doing to support, like we're very ESG friendly. So I asked them on a call, like, oh, tell me about some of your initiatives. And their response was, this will someday be an underground mine and we're not going to disrupt above ground, so we're ESG friendly. And that, I was like, I'm out. That's not what ESG means. Like every mining company that's an underground mine could claim ESG. But so it's really important to, yes, they're going to have these like, hot topic headers and these, really impactful statements, but it's really digging into the details and getting specific examples of what they're doing.
I love that call out, Whitney. Like, I think that's something that you kind of touched on when you showed like, oh, this statement, like, what does that actually mean? Of course, they're going to try and improve revenue. I think that that's such a good call out of like, just because they say that they have XYZ, like make sure there's actual numbers to back it up. And that's where too, why I like to look at a lot of different companies within that industry, because it helps me benchmark. Like if they say like, we have really high profitability or like relative, like, industry leading, like how is it actually relative to others, right?
Exactly. Okay, and I realized maybe my screen wasn't sharing correctly, so apologies if that was the case. So yeah, there were a bunch of other things throughout the deck that I flagged. So basically I just read through the deck and look at, what are my questions and write them all down. A lot of times decks are going to have a competitor slide or a comp slide. So this is something where I would want to do a lot more research about, and this goes into the macro space. What does the competition look like? What are other companies doing well or not well? And what differentiates this company from all the rest? So obviously in their deck, they're going to be like, we're the best. We check every box and none of the other companies do. But obviously every other company is going to say that. So that's where... What?
The fact that they have Instacart on there, like, how is Instacart one of their top competitors?
Yeah, I had some questions. Anyway, but I just wanted to call that out, that comparing competition is a really good piece of due diligence. Yeah, so another thing that was interesting to me is they have gourmet dining, in-store dining areas with restaurant-grade Asian gourmet food, which to me, I was like, that seems like kind of a distraction from the grocery piece, but that is something that I would, again, want to dig into.
That's interesting you had that perception, because I've been to those, and I was like, oh, that's so smart that they have those, because I've gone to eat there, and then I'm like, oh, I should just grab some other things while we're here, right?
Okay. Yeah, I mean, my first thought, I was like, running a restaurant while concurrently running a grocery store, that seems like 2 different businesses to me. And so there's going to be a division between, like, it's a split in focus, which for a small cap company, if they're doing too many things, they're not going to be successful at any one thing. So that's why it kind of, I was like, all right, again, like, I just would want to understand more about how does that play into their vision of, you know, being this go-to Asian grocery store.
Well, and that's a great call out, Winnie, that like just because my gut says, "Oh, I like that," it like that's where too when you're looking at the annual report, a lot of times if you have very clearly different business segments, they will actually break those down in the annual report. So, hopefully, they would break down gourmet dining and the actual grocery store as two separate segments. And Whitney may be spot on just because it seems cool. It might actually be like a huge like maybe it's a loss leader and it's helping getting people in the store. Maybe it's just like not profitable and they should cut it out, right? Like who knows?
Yeah, exactly. It's just like that's just something I flagged as like more investigation needed. So, and then the other thing I wanted to call out here, so one of their slides talks about an expansion initiative of this new flagship store that's opening in California later this year. And then it talks about how the company intends to enter into a related party transaction with the affiliate to acquire the Roland Heights store once it's completed. So if I were to glance at this slide and I wasn't reading through everything, I'd be like, oh, cool, they have an expansion initiative. They look at this beautiful store. But when you read that, there's some extra risk there because it's not them opening the store. So it's not sure that it's going to happen. And then the other thing, which I'll touch on in a bit, is the related party transaction. So whenever you see that, that's something that you definitely want to dig more into. It's not always a red flag, but it's a flag that should be paid attention to. And then another question, I just had so many questions on this one, and that's honestly like not a great sign that I had so many questions, but like another question, they talk about needing to renovate their existing stores. And so then it was like, okay, so you need to renovate, but you're also trying to do expansion. You know, it just, again, they're trying to do a lot. And for a small cap company, I mean, they're a $15 million market cap company. Like the lack of focus is concerning to me.
What does their cash flow look like? Like, are they like accumulating more debt to finance this or?
Well, we will get into that. So, okay, I'll go ahead and skip to the financials. Let's see, let's go to, I think, yeah. Okay, so if you go to their financial statements, on their balance sheet, they have zero cash. So that's not great. Ideally, a company has some runway on their cash and cash equivalents. Another thing to note, their accounts payable is quite high considering they have no cash. So it's 5.3 million. And then the other thing I always look for, especially on these micro caps, is how much debt do they have? And current debt that's due, and current debt means it's due within the next year. Their current debt is $15 million. So all of that together, I'm like, no cash, $15 million coming due this year. That's a lot of red flags. So that alone would honestly probably make me not even do any more due diligence on this company. But going back to so that was a good question, Britt, because yeah, that says it all. But the other thing I wanted to note about the related party transactions, so this company has a lot of related party transactions. And so that's why it's really important to read the MD&A and the financials and basically read the fine print, because there's going to be things that you're not going to find on their website or in their deck or even, you know, reading through the press releases. But this is information that they have to disclose. They just kind of maybe not try to hide it, but they're not emphasizing it, right? So this will give you the best full picture that you can possibly get. So this company, their chairman and president, that 10%, 90% ownership that I mentioned, basically it's the chairman and president's wife owns it. So to me, that's like, okay, that's a lot of money, you know, exchanging hands. And then in another part of the financials, it talks about the $15 million in debt. If I remember correctly, it's due to the CEO. And on the one hand, that can be a good thing when it's a related party, because then it means it's theoretically going to be a friendly player. So they're going to be flexible about extending the debt out or being flexible about payment terms. But then on the other hand, it's like that's a lot to owe to the CEO. So anyway, that's just too much. If it was a smaller amount, then I might have a call with them and just ask, what's the plan? Why is this the case? But 15 million versus 0 in cash, that's a no for me. So doesn't matter how good your strategy is. That's a tough place to be.
For sure. And I think this is really touching on when I think we need to do a deep dive on how to read financial statements.
Probably, maybe
Because
next
there were a
week.
lot of lines and it's hard to know which ones to look at.
Very true. All right. Well, so yeah, that was kind of a quick rundown on large cap versus micro cap. There's a lot of synergies, right? Like the macro environment's going to be the same for both. But there's different considerations, I think, for a large cap versus a micro cap. And
Yep.
yeah, like you
Micro
said, more.
caps too, it felt more, I feel like micro caps, it's almost, more to like, what's the right word? Like it almost seems more like a story in that like Costco's been around for so long, has so many employees and so many, whereas like you really, I love Whitney that you touched on like what's the story, right? And what's
Yeah.
the general premise behind it? And then you realize too, there's a lot more risk. You know that
Yeah.
the CEO of Costco, his wife does not own 90% of, what have you. So that kind of leads into what we were talking about before too, with a lot of these firms just focus on the larger companies because there is a little less of that convolutedness. I don't know how we want to phrase that.
Yeah. I mean, no, micro caps in general, you're absolutely right. It's much riskier than investing in a large cap stock. The flip side to that is that with high risk comes the potential for high return. So this wasn't a good example of one where I'd be like, wow, there's so much potential here for a high return. But I'm sure in future weeks we'll go through more micro caps, and some of them it blows you away how much potential they have. So yeah, you looking at microcaps, it's really like you're searching for the diamonds in the rough. You're looking for, you're gonna look at a lot of crap, but when you find a good one, it's really exciting. So
For sure. And you're also, I mean, we talked about like Costco's a great company, but it's highly valued. A ton of people are watching it, and it's got a really high PE ratio. Whereas some of these micro caps, if you can get to know the story, get to know the CEO and the growth strategy, you can, make really significant returns. So fun looking at both sides of the market and excited to tune in next week.
yeah, lots of opportunity out there. So anyway, thanks for joining us on Finance Files, and we'll see you next week.